Hi everyone, let's go over my bullish and bearish macro and high time frame Elliott Wave scenarios on Bitcoin. Starting with the macro bullish scenario where we're looking for a wave 1, 2, 3, 4 is already finished, and then looking for a wave 5 to the upside where the most common target for wave 5 is between 98k and 174k. In this particular scenario, wave 4 bounced right on top of the 0.5 Fibonacci taken from the low of 2 to the high of 3, which is a common target for wave 4. The low was made on the weekly time frame exactly on the 0.618 Fib time, also taken from the low of 2 to the high of 3, and we had a volume peak at the lows of this wave 4, which can signal a potential reversal area, just like it did with the lows over here of this wave 2, which was the COVID dump. But for me, in Elliott Wave scenarios, we're talking about a wave 2 over there, for then a potential move to the upside in the bullish scenario towards that common target. If we then go to the bearish scenario, then we're looking at a 5-wave structure that is already finished. And over here, a wave 1, 2, 3, 4, and then a wave 5, which is the all-time high. In this scenario, this wave 4, however, is very, very short compared to this wave 2, as usually a wave 4 takes more time to form than a wave 2 does. So in this scenario, this is not really something you like to see, and therefore potentially the bullish scenario is a more preferred scenario compared to this particular bearish scenario, just because of this wave 4 over here. But nonetheless, in this bearish scenario, the wave 5 is the high, and we're looking at a 3-wave corrective structure, which then looks to be an ABC, a 3-wave move with a 5-wave move in then a wave A, followed by a 3-wave structure in B, and then another 5-wave move to the downside in C, where inside this wave B, I'm looking then for a 3-wave structure in a 5-3-5, which is an impulse structure in a wave A, followed by a 3-wave structure in a wave B, before then another impulsive structure to the upside in a wave C. And the interesting target area for a wave C and then the end of the red B is between the golden pocket and the 786, mainly because of the confluences that you see on the left side. So you see a volume profile over here, and the point of control, the area where most of the volume has been traded in this range, is right on top of the 0.618. So this level at about 39 to 40k is very, very, very important resistance for Bitcoin. However, we also have the value area high of this volume profile in confluence with the 786 about 49 to 50k. So very important resistance over here for Bitcoin, for then a potential move towards the downside in this scenario, where if we look towards the downside, we also have massive support for Bitcoin, especially in this area over here between about 11k and 8k. And it has to do with, first of all, the golden pocket that we have over here taken from the low to the all-time high. Also the value area high, as you can see over here from this multi-year volume profile range, which is crossing right inside the golden pocket at 9.7k. And if we have an A and then a B and or an A, B, C, and this wave C and eventually the red B is finishing around this area, the most common target for the red wave C to the downside and then an A, B, C also is in confluence with the golden pocket and that key level, the value area high at 9.7k. So that is a really impressive support area for Bitcoin, and above we then have a very impressive resistance area for Bitcoin. So yeah, I think this is very, very interesting, and in this scenario I think it would be nice if this is the high of wave A, because we have a big support resistance area over here. So a little bit of a retracement would be nice for then a wave B and a wave C towards the upside. If we then go to the high time frame scenarios and move over to the daily time frame, then I want to start with two alternative scenarios, and the first one is this one. So in this scenario, we are looking for a 5-wave move to the upside and then a wave 1, 2, 3, 4, 5, where then wave 1 is extended. And because this wave 1 is extended instead of a wave 3 being extended, the targets for wave 2 and 4 change. So the most common target for wave 2 is actually also between the 236 and the 382 if wave 1 is extended. However, it reached the 0.5. That is a rare target, but still a target nonetheless if wave 1 is extended. And the most common target area for a wave 4 if wave 1 is extended is between the 0.236 and the 0.382. However, in an impulsive structure, you don't like to see wave 1 and wave 4 overlapping unless it is a diagonal, but that is already invalidated. So in this scenario, the invalidation is very close to where price is at 25.3k. And in this particular scenario as well, if we look at this to be a 3-wave structure and then a wave 4, preferably this wick over here is the low of this wave 4, because if price would now move to the upside and then down again, yeah, okay, we have a bit of a double bottom for maybe a liquidity grab and a move up, but honestly, If we are going to take these lows, the chances are quite high, in my opinion. We're going to drop deeper to at least the yellow target box that we have between 24,850 and 24.3k, which then would invalidate this scenario as well. But my main reason for this now being an alternative is because of the price action we have from the first wick to the upside, which doesn't look to be a nice 5-wave bullish structure for the beginning of this wave 5. It looks more like a 3-wave structure, which is corrective, and therefore one can still expect potentially further downside to come. If we then go to another alternative scenario, it is the 1-2-1-2 scenario. So in this scenario, we then have wave 1 finished, wave 2 being very short, only 0.236 of the time it took to develop wave 1. So a very short wave 2. By the way, the fib time taken from the low of 1 to the high of 1, and then double click over here to compare the time of wave 1 to wave 2. And as you can see, wave 2 is just very, very short. And then we have the blue wave 1 over here, followed then by another blue wave 2. And there's two reasons why this is an alternative scenario for me. First of all, the blue wave 2 is larger in time compared to the green wave 2. And one has to understand that in Elliott waves, you have different degrees, like wave count degrees. And the green count is a higher degree count than the blue count. So what we're looking for in green is a 1, 2, and then eventually a bigger 3, 4, 5. And then inside the green 3, you can count another 5-wave structure and then a 1, 2, 3, 4, 5. So the blue count is a lower degree count, and therefore usually what you see in a lower degree count is that the impulsive structures are shorter in time compared to the higher degree count. So in this scenario, what you would prefer to see is wave 1 being shorter than this wave 1, which is true, but then this wave 2 being shorter in time than this wave 2 over here. However, that is clearly not the case. This wave 2 is much longer in time already than this wave 2, and that is an important reason for this being an alternative scenario. Besides, this wave 2 at the moment is bouncing on the 0.382, which is a rare target for a wave 2 taken from the low of 2 to the high of 1, all these Fibonacci's over here. The most common target for a wave 2 is between the 0.5 and the 0.786, which is between 24.7k and 21.6k, but currently bouncing twice on the 0.382. That's a rare target for this wave 2, not a common one. And also this wave 2, as mentioned, is starting to become very long. So if this wave 2 wants to reach the more common targets for a wave 2, it more likely probably will go up a bit and then more down, which means that this wave 2 will be even extended longer in time, and it just becomes very, very unlikely in this particular scenario. So my preferred scenario at the moment for both the macro bullish and bearish scenario, because this is then either a wave 1 or a wave A, followed by a wave 2 or B, and then a C or bigger 3 to the upside, is that this is already a finished 5-wave structure in a wave 1, 2, 3, 4, 5-wave move to the upside, and this is now a corrective structure, part of then a wave 2 or a wave B. Now, as mentioned, the common targets for a wave 2 are between the 0.5 and the 0.786, but this fib is pulled from the low to the high over here, and the current common targets for a wave 2 are between 21.9k or basically 22k and 18k. And important to note is that for a wave B, the 382 and the 886 are also common targets. Now, I think the 886, I don't really see price going there, to be honest, but hey, you never say never. The 382, however, if price would move down and hit the 382 and then move up, it is more likely from a probability standpoint that this is an ABC compared to a 1, 2, 3, 4, 5, and eventually more upside. So for a wave 2, you really want to see price moving into this area over here, where I think an interesting support area is the blue target box that we have over here between 22.6k and 21.8k, which also fits nicely with my low time frame scenarios that I'm sharing in the daily videos, where we're now looking for a 3-wave move to the upside, before then another continuation to the downside, where I think this blue target box is a very, very interesting support area for then a potential move towards the upside. And then we have to wait and see how price is going to move to the upside, because in a wave 3, you want to see volume increasing massively while price is moving to the upside, and usually a wave 3 is very vertical, very impulsive, while if this is going to be a wave C, usually a wave C tends to take a little bit longer, like it's a bit lazier, I suppose, and also the volume in a wave C is never as high as in a wave 3. Usually the volume of a wave C is quite equal to the volume in a wave 1, while in a wave 3 the volume should be higher than in a wave 1. That being said, I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.